welcome to the EisnerAmper Engaging Alternatives podcast series. I'm your host, Elana Margulies-Snyderman, and with me today is Tadd Wessel, managing partner at Petrichor Capital, a New York-based investment firm which invests in healthcare managers and businesses to drive scientific and medical innovation. Today, Tadd, formerly with OrbiMed Advisors and Fortress Investment Group, will share his outlook for growth capital investing in healthcare, including the greatest opportunities, challenges, and more. Before we dive into the conversation with Tadd, don't forget to hit that like button and subscribe to EisnerAmper wherever you listen to your podcasts. And you can also find us on YouTube at EisnerAmper. Hi, Tadd. Thank you so much for being with me today.
Thanks for having me, Elana.
Absolutely, Tadd. So to kick off the conversation, tell us a little about yourself and how you got to where you are today.
Yeah, sure. So I've spent my entire career in the healthcare sector. It all started when I took a class in college called Biotechnology and its Social Impact. Luminaries like Roy Vagelos and others from Genentech came on campus, and I became enamored with biotechnology. And so pursued opportunities in consulting, banking, companies, and was hired by Robertson Stephens, who at the time was one of the few investment banks covering the biotech space, which back then only had a few hundred companies, and not many were public and large. Spent the early portion of my career working with some of the best and brightest, like Genentech, Celgene, Cephalon, and then eventually moved to the buy side, where I went to work at Fortress Investment Group, which is where I learned how to structure investments, and did that as part of a team exclusively focused on the sector. Spent about 3 years there before I joined OrbiMed, which is one of the largest dedicated healthcare managers globally. I was brought on board to build out a business, which I grew from approximately 0 to 2 to 3 billion of assets under management. Scaled the team and was part of the group that took OrbiMed from 4 to 20 billion of assets under management. It was at that time that I identified an opportunity to pursue a little bit different of a niche in the market, and spun out to form Petrichor about 8 years ago now, and have been building the organization over that time. I've got a fantastic team around me. Patrick Lally and Michael Beecham and I have been working together across several different organizations, Fortress and OrbiMed, and together for 17 years. And we've built a group of professionals that now exceeds over 40 people. We're based in New York, but also have office space in Cambridge, and advisors and operating partners across the Eastern Seaboard, as well as in Europe.
At EisnerAmper, we are creative problem solvers that take a 360-degree approach focusing on you. We're an award-winning firm with decades of experience. EisnerAmper. Let's get you ready.
Tadd, I loved hearing your journey. Given Petrichor's focus on growth capital investing in healthcare, I would love to hear your overall high-level outlook for the space.
Yeah, so we focus primarily in the life sciences segment, and we define that as therapeutics, diagnostics, medical technologies. We spend most of our time in North America, but about a third of our time in Europe. The space has been incredible over my career. We've seen multiple $100 billion companies created, multiple blockbusters. Typically, there are anywhere from 40 to 60 drugs approved at FDA just in the US, and we have over $1 trillion in life sciences revenue. And it's been an important economic hub for the GDP, and most importantly for patients. The first 6 months of this year, however, have been pretty tough. The Trump administration has done an incredible job of reworking the various healthcare agencies, whether that's FDA, HHS, NIH, and cutting funding from some of the earliest sources, but also Doge going through with its scalpel. And that's really caused an exodus of capital from the space. And so what we've been faced with in the first 6 months of this year is valuations that are at 15-year lows. And at the same time, we have innovation that arguably is at all-time highs. It's created an incredible investment opportunity for healthcare specialists, certainly as generalists have moved away from the market. Part of what's driving this as well is big pharma and biotech companies who are the biggest marketers of products have a patent cliff. Many of us have read about this, but namely the biggest players have about $350 billion of revenue that's going off patent. And they're looking to acquire revenue or late stage programs to fill that. Currently, those companies have about $1 trillion of buying power. And on average, they spend about 4 times revenue. And so even spending their cash and some of their equity, they're just able or not even able to refill the coffers. And so it's created a moment in time now where after a bit of price discovery after the first 6 months, we're starting to see M&A come back on. That said, the IPO window has been closed. We've had a handful or 2 handfuls of IPOs this year to date, and specifically as of the summer, it's been pretty tough. The only IPO to go out so far in September in price, in fact, was really a public restructuring deal where $150 million of capital had been invested, and they went out at a $50 million pre just to survive. And so we're starting to see a lot of capitulation on the private company side from prior valuations, many of which were set during the COVID bubble in life sciences. And so we're incredibly excited about the market opportunity today.
And Tadd, I know you briefly touched on this innovation, but love for you to touch upon some specific other greatest opportunities you see in your space going forward and why.
Yeah, so we talk a lot internally about hunting grounds and key trends in the space, and we update these every 6 to 12 months. Typically, these are going to be areas where there are new innovations that have just been commercialized, and that's where we focus in the market. And these are products or technologies that are on their early stage commercial path. They're looking for capital and partners to help scale those. And we identify those by following the research for 10, 20, and sometimes our entire careers. Some of those areas we've had a lot of success with historically are cell and gene therapy. We got involved early on when the infrastructure or the picks and shovels were being built out for that space. We saw some tremendous success in our portfolio from those names. Currently, we're focused in the rare disease market. This is an area where recent FDA focus has provided strong tailwinds, coupled with a number of strong drug launches and more M&A. And this space is a bit insulated from some of the political and pricing regulatory pressures, at least from a headwind perspective, or I should say a headline perspective, that the biotech market has seen overall. We also really like the radiopharmaceutical space. And radiopharmaceuticals employ nuclear isotopes combined with targeting molecules to target tumors for imaging and therapeutics. This is a brand new area of medicine, really blazed by Novartis, who is launching launched the largest product and created the biggest blockbuster in the space called Pluvicto for prostate cancer. A key opinion leader just spoke at ESMO, which is a European Society of Medical Oncology this week, in front of, I think, almost 10,000 people on the latest data, PSMA edition, which will move it into hormone-sensitive prostate cancer patients. One of our portfolio companies actually manufactures the isotope that's used in Pluvicto, which has had tremendous success as well. Other areas we like are precision medicine, cardiovascular, artificial intelligence overall. And where we fit best in the market is really finding these companies that are off the beaten path that don't typically have a healthcare institutional investor. So these can be carve-outs or spin-outs or ultra-high net worth founded companies, and we can be the first healthcare institutional investor to come and join the board. Typically, we're investing anywhere from $25 to $50 million and help them scale the commercial, the manufacturing, et cetera. And so we try to introduce them to the healthcare specialist market. Sometimes if they grow more than that, they'll go certainly to IPO. We've had a few of those. But what's been interesting as well is interest from the bigger fund private equity players. And so groups like Blackstone, BlackRock, Temasek, QIA, et cetera, have invested in a number of our companies as well. And so there's a lot of interest from a lot of different areas. And I think we're in a nice sweet spot in the market to attract a number of those opportunities.
Tadd, on the other hand, I know you briefly touched on this at the beginning of our conversation about some of the challenges you were up against earlier this year with the political landscape, but I'd love for you to take a deeper dive and discuss more challenges you face and why.
Yeah, so developing drugs is a tough business. Commercializing drugs is a tough business. A lot can go right and go wrong. Just taking a step back, it takes 10 to 12 years and $2 to $3 billion to get a drug approved. So that's binary risk in the VC market. And so we don't focus in that area, but we learn from it. And it gives us a great visibility into the competitive landscape and pipeline and what can happen to commercial products and in the future based on what's happening in the pipeline. So we spend a lot of time thinking about that and making sure we understand that portion of the market. And we target patent protected products that are commercial and have strong operations where we think we can add value. And so the challenges for us are working through intellectual property, making sure that companies have written in a picket fence approach so it's well protected for 10, 20 plus years. We've got a lot of experience in those areas, working with external IP counsel, but also litigating patents and winning some big cases, and also writing patents as we loan them for the companies. We're also spend a lot of time thinking about building out strong operations. And so building commercial teams, supply chain, manufacturing footprints. We've done that incredibly well with a number of our companies, but it's challenging to do depending upon which geography or which type of product you're working with. And for example, in radiopharmaceuticals, you're working with nuclear material. And so that presents its own types of risks and regulation. But really what we're looking for is differentiated commercial products. These have an attractive clinical profile, favorable reimbursement, a clean regulatory record, and again, a competitive environment that's visible and knowable. So we can underwrite. And what we do with that package once we work through it is join the board and help teams execute. And we can do that either with existing management teams or evolve management teams over time. We've had success with all of the above.
Tadd, we've covered a lot of ground today and wanted to see if you have any final thoughts you would like to share with us.
I would say now is an amazing time to get into life sciences, juxtaposed against AI and tech, which has obviously been one of the hottest areas with the deregulation of crypto as well happening. But with the Trump administration's activities within healthcare, the entry point is incredibly attractive. And whether you think this is the market conditions are 1999 or 2000, or even maybe the 70s, healthcare is around to stay. It certainly is inflation resistant. And I think as beat up as prices are today, it's a great time to get involved. And we're incredibly excited about our pipeline. Second only to the pipeline I saw when I was investing during the great financial crisis back in 2009.
Tadd, I wanted to thank you so much for sharing your perspective with our listeners.
Great. This was a lot of fun. Thanks for having me, Elana.
And thank you for listening to the EisnerAmper podcast series. Visit EisnerAmper.com for more information on this and a host of other topics. And join us for our next EisnerAmper podcast when we get down to business.